Welcome to the Business Finance Bulletin, episode 108. Welcome again to this week's Business Finance Bulletin with me, Rob Warlow from Business Loan Services. In this week's bulletin, I look at the latest findings from the British Business Bank and their survey on the state of the UK's SMEs, a call for more transparency in small business finance pricing, and also mobile payments via phone on the increase. And in my business finance tip of the week, a question: are you solvent? The flow of finance is on the increase to small businesses in the UK. That's according to a new report carried out by the British Business Bank as part of their annual Small Business Finance Market Survey. So first of all, who are the British Business Bank? Well, they are a government-run organisation which is a home to all of the government schemes designed to improve access to finance for UK SMEs. The British Business Bank is there to provide not only support to challenger banks to help get money out there, but also in some cases loans and equity injections to small businesses directly. Their overall aim is to make sure there's a more diverse funding base here in the UK for small businesses to access. So what does the report show? Well, first of all, some good news on the number of businesses in the UK. The report estimates that in 2014 there were 350,000 newly registered businesses, which took that up to a record number of 5.4 million businesses in the UK. So where are all these businesses getting their money from? Well, as I said at the start, the flow of finance is increasing, and the report does kind of highlight that banks are now starting to come into the market, as I've mentioned in previous bulletins. They do recognise that over the last 4 quarters, there has been an increase every quarter there in money lent out by banks, and that's a good sign. But the report does recognise that not every business is getting a yes, as we would expect. Why is that? Well, part of the reason is the information flow. I think it's the fact that many banks are now shedding managers and many businesses are not getting that opportunity to present their case face to face. So where are they going then if the bank's not supporting? Well, perhaps not surprisingly, sources of alternative finance are up. Figure presented in that report is a 75% increase in 2015. And again, it just shows that the alternative sector is really powering ahead. Crowdfunding is part of that alternative finance scene, and the report reckons that part of the survey that they've done, 49% of businesses say they are aware of crowdfunding, and that's compared to only 13% being aware in 2012. So you can see a really big increase there. However, the downside, only 1% of businesses have said they've actually used crowdfunding to get finance. So a big gap to close there between awareness and actual usage. Friends and families, 34% of startups said they've got money from there. Well, you know my view if you watch previous bulletins, getting money from friends and family is quick and easy, but beware. If you ever default, it can really cause major problems amongst your social circle. So just watch out for that. And then, of course, there's equity. And the report reckons that there's been a 48% per annum increase since 2012 of businesses accessing seed funding via equity. So that's really just about giving shares away in order to help grow your business. I think one interesting thing that comes out of the report is the fact that whilst we've got all these new businesses starting to grow, internationally, we are near the bottom of the league as regards scale-ups. And these are businesses going from small to those employing more than 10 people. So there's a lot to do for us to become a scale-up economy and get businesses from small to big. If you want to know what the British Business Bank can do for you, just go along to their website, which is british-business-bank.co.uk. The pricing of financial products needs to be more transparent. That's a call coming out from alternative finance provider Growth Street. Growth Street, who provide alternative overdrafts and working capital facilities to businesses, is calling for commercial lenders to be more transparent when it comes to the true cost of loans. Now, from a regulatory perspective, finance products given out to limited companies are not regulated. And so if you're a consumer, you may be familiar with the term APR. the APR, which is the annual percentage rate. And that's the true rate of the cost of funds when you factor in interest and all the other fees. Now, because lending to limited companies are not regulated, not all lenders give an APR. And Growth Street are saying that's not fair. How can businesses compare apples with apples when not all businesses are compelled to be transparent on their pricing? So Growth Street is starting a bit of a campaign. It's asking the government to introduce legislation to bring in APRs, and they're calling this APRs for SMEs, APR for SMEs. A nice little tagline to try and get some momentum going for more transparency in the sector. A good call, because it is important that you do have a much clearer idea up front of exactly what a facility is going to cost you in order to allow you to shop around and get the very best deal. So well done to Growth Street there, and let's hope that campaign continues to gather some pace. As technology becomes an increasingly important part of our lives, it's clear that individuals and small businesses are becoming much more comfortable with the concept of making payments via their mobile phone. Well, that's a finding that's come out from mobile phone payments provider Paym. Paym were launched in 2014 as a middleman between people who want to make payments via the phone. And since they've started, they've now got 3.25 million phone numbers registered on their database. And they've seen a rapid growth. Since inception, they've facilitated payments totaling £146 million. But news from Paym is that in the last 6 months of 2015, they saw an 89% increase in the number of transactions sent. In fact, 1.46 million payments were made in that last 6 months. And that's an 89% increase on what they saw in the first 6 months of 2015. So it's clear that businesses and individuals feel much more comfortable now sending money via phones. The average payment, well, that's starting to come down as well, apparently. And the average payment is now just under £50. So why would this be of use to small businesses like you? Well, and I did review Paym quite a few bulletins ago when it was just recently launched. And the key thing is for small businesses, it's really good for traders, people who are handling small payments of cash. Electricians, jobbing builders, carpenters, whatever, really good for service businesses. It means that you're guaranteed to have payment there and then, instead having to wait for a check to come, go back again, or just handle all that cash. It's a great way of doing it. So if you're in that position and you want to know how you can make use of mobile phone payments, just go along to the Paym website, which is paym, paym.co.uk, and there you'll see all the banks listed there who are party to this service. A great way of making sure you don't get trapped in late payment, and it'll just facilitate payments generally so you don't have to handle too much cash. On now to my business finance tip of the week, and a question for you. Are you solvent? This is one question that a bank is going to ask when it's reviewing your financial information. So first of all, how do you know that you're solvent? So you say, well, I'm solvent because I got money in the bank account and money in my pocket. From a banker's point of view, not as simple as that. What's the test? Well, if you go and get your latest annual accounts and turn to the balance sheet page, you will see within the balance sheet something called current assets and current liabilities. Now, the word current is important. Current in accounting terms is defined as a period 12 months or less. So, for example, it's a current asset or asset that you can turn back into cash within 12 months. Current liabilities are liabilities that are due for payment within 12 months. So one of the quick asset tests of whether you're solvent or not is looking at the difference between your current assets and current liabilities. So let's show you this quickly. Let's assume you've got current assets of £100,000. Now your current assets are made up of stock, cash and debtors. That's money owed to you. So £100,000 in current assets. Your current liabilities being loans with payments that are due within the next 12 months, your creditors, people you owe money to, or a bank overdraft. So let's say in this case, your current liabilities come to £70,000. So assets 100, liabilities 70, you are solvent to the tune of £30,000. A tick in the box where the bank is concerned. But you could be in an insolvent position whereby, for example, say your current assets are only £30,000, but your current liabilities are £100,000. So you were in deficit to the tune of £70,000, overdrawn from an insolvency perspective, and that is a red flag to the bank. Why? Well, it means that you on paper may not be able to make payment of all of your debts as and when they become due, because you haven't got enough current assets in order to meet those current liabilities. What can you do about it? Well, obviously the first thing, get into profit. And more profit that you retain within the business, that equation will shift around. The other quick thing you can do, current liability says made up of an overdraft. That may be that you've got a solid overdraft, that you just never ever go below a certain amount. And if there is a figure to which you never go below, what you can do is turn that element of that overdraft into a loan, and so that takes it into another part of the balance sheet. So it means from a current liability perspective, suddenly that liability could potentially become zero, therefore making you solvent on a day-to-day basis. So there we are, a quick accountancy tip there for you on solvency. Well, that's it for this week, and as ever, I hope you enjoyed the bulletin. If you did, please don't forget to give it a like. It all helps. If you're watching on YouTube, just hit the like button. If you're listening to the podcast version on our SoundCloud, iTunes and Stitcher channel, also give it a like or a share. It really helps. So that's it for this week. Don't forget, if you have got a finance query or you want to discuss a possible finance raising exercise, always happy to chat. Just drop us an email, info@businessloanservices.co.uk, or visit our website, businessloanservices.co.uk. That's it for this week. Look forward to being with you again next time. Thanks very much, and bye-bye.